One AI company changed the technology race forever, and almost overnight, thousands of employees became dramatically wealthier than anyone expected. Behind its soaring valuation stood a business that reshaped Silicon Valley through artificial intelligence. But how did one company create so many millionaires? And what does it reveal about the future of AI and wealth creation? Artificial intelligence is no longer just changing software, it's transforming entire industries and creating wealth faster than almost any technology before. At the center of this revolution is OpenAI, led by Sam Altman, with a mission to build artificial intelligence that could reshape how people work, learn, and solve problems. Within just a few years, AI became part of everyday life. Millions began using it for writing, coding, research, education, and business, making advanced AI as familiar as internet search. As demand accelerated, major technology companies invested billions, convinced that AI would become one of the defining technologies of the 21st century. With every funding round, OpenAI's estimated valuation climbed dramatically, surprising even experienced investors. Many believed the company was building the foundation of tomorrow's digital economy. For employees, those investments quietly transformed stock-based compensation into extraordinary paper wealth. Shares that once seemed like a long-term bonus suddenly carried life-changing value. Yet that wealth largely existed on paper. It depended on OpenAI's estimated valuation rather than cash sitting in personal bank accounts. Around the world, headlines focused on the AI boom. But behind the scenes, thousands of engineers, researchers, and employees were helping build one of the world's most valuable AI companies. Artificial intelligence expanded far beyond chatbots, becoming a powerful tool for productivity across healthcare, education, finance, software, and countless other industries. The extraordinary valuation wasn't based only on what OpenAI had already achieved. Investors were betting on what artificial intelligence might become over the coming decades. But that raises an even bigger question. How did OpenAI grow from an ambitious research organization into one of the most valuable companies in technology? To answer that, we need to return to where the story first began. Before the billion-dollar headlines, OpenAI was a relatively small research organization, pursuing one of humanity's most ambitious scientific goals: creating artificial intelligence that could benefit everyone. Its leaders believed AI would eventually transform nearly every industry, making long-term research more important than short-term commercial success. Early supporters included prominent technology investors who recognized AI's enormous potential years before it captured global attention. Researchers focused on solving fundamental challenges rather than building products. But every breakthrough demanded greater computing power and significantly larger financial investments. Training increasingly capable AI models required vast amounts of specialized hardware, making advanced research more expensive with each new generation. To secure the resources needed for that mission, OpenAI adopted a unique capped profit structure, allowing outside investment while preserving its broader long-term vision. A major partnership with Microsoft became a turning point, providing access to world-class cloud infrastructure and the computing power required to train increasingly advanced AI systems. Inside the company, researchers believed years of quiet work were finally approaching a breakthrough that could introduce artificial intelligence to the general public. That breakthrough arrived with ChatGPT. Within days of its launch, millions of people were experimenting with conversational AI. Businesses, students, developers, and professionals quickly discovered practical uses that few had imagined before. Adoption accelerated at an extraordinary pace, making ChatGPT one of the fastest-growing technology products in history and bringing artificial intelligence into everyday life. As user numbers surged, investors dramatically reassessed OpenAI's future potential. The company's estimated valuation climbed rapidly, and employee equity became far more valuable than many had ever expected. OpenAI was no longer viewed as just a research lab. It had become one of the world's most influential AI companies. The next chapter explains why investors believed its future could be worth hundreds of billions of dollars. As millions embraced ChatGPT, investors stopped seeing OpenAI as just another startup. They began seeing the foundation of an entirely new technology platform. Public attention intensified as OpenAI quickly became one of Silicon Valley's biggest success stories, attracting interest from businesses, governments, and investors worldwide. A company's valuation isn't based only on today's revenue. It reflects what investors believe that company could become in the future. Many viewed artificial intelligence as the next foundational technology, with the potential to transform industries much like the internet and smartphones once did. Instead of valuing only current products, investors looked ahead to future markets that advanced AI could reshape across healthcare, education, finance, software, and countless other industries. Inside OpenAI, employees continued building new AI systems while the estimated value of their equity quietly increased with every successful funding round. Each higher valuation raised the paper value of existing ownership, even though most employees weren't selling their shares. Because OpenAI remained privately held, those shares were valuable but far less liquid than publicly traded stock. Occasional secondary share sales allowed some employees to realize a portion of their growing wealth while continuing to hold meaningful ownership. As AI adoption accelerated across the global economy, investor confidence continued strengthening, pushing OpenAI's estimated value even higher. Every new product launch reinforced expectations that future growth could justify even larger valuations. The result was extraordinary. Thousands of employee ownership stakes appreciated alongside the company's rapid rise, turning years of patient work into life-changing financial opportunities. The next chapter reveals who benefited the most and why employee equity became one of Silicon Valley's greatest engines of wealth creation. The biggest winners weren't always famous executives. Many were ordinary employees who received equity long before OpenAI became one of the world's most valuable AI companies. In the early years, many accepted lower salaries because ownership offered the possibility of much greater long-term rewards. Instead of receiving only cash, employees earned equity grants that represented a small stake in the company's future. Those shares typically vested over time, encouraging employees to stay and help build the business through years of uncertainty. Back then, no one knew whether those ownership stakes would become life-changing fortunes or end up worth very little. As OpenAI's valuation climbed, even relatively small equity grants grew into surprisingly valuable assets. Some employees discovered they had become paper millionaires while continuing the same work they had done every day. But paper wealth isn't the same as cash. The value existed on paper until shares could be sold through approved liquidity events. Many employees worked with financial advisors to understand taxes, long-term planning, and the limited opportunities available to sell part of their holdings. Early investors also benefited as each funding round pushed the company's estimated valuation even higher. Not every employee became equally wealthy. The size of each ownership stake depended on when they joined, their role, and the equity they received. Those who joined earlier generally benefited the most, giving their shares more time to appreciate alongside the company's remarkable growth. The rising valuation rewarded thousands of contributors, not just a handful of senior leaders, and demonstrated how employee ownership can create extraordinary long-term wealth. But one question remained. Why were investors still willing to commit billions of dollars even after OpenAI had already reached such an extraordinary valuation? If OpenAI was already enormously valuable, Why did experienced investors continue competing for ownership? The answer wasn't simply today's business. Investors were looking decades into the future. OpenAI continued investing in long-term research while expanding AI products used by businesses, developers, and consumers around the world. Rather than valuing one application, investors believed artificial intelligence could transform nearly every major industry over time. Companies increasingly adopted AI to improve productivity, automate repetitive work, and support faster, smarter decision-making. Developers built thousands of applications around advanced AI models, creating an expanding ecosystem that strengthened confidence in OpenAI's long-term potential. Behind every breakthrough stood enormous computing infrastructure, requiring billions of dollars in hardware, cloud capacity, and engineering expertise. That infrastructure became a powerful competitive advantage because only a small number of organizations could train frontier AI models at this scale. As more businesses embraced AI, adoption accelerated across industries, reinforcing expectations of sustained long-term growth. Large enterprise customers also sought trusted technology partners, encouraging continued investment in advanced AI capabilities. These valuations reflected future expectations rather than guarantees, but those expectations strongly influenced every funding round. Competition intensified as companies raced to build more capable AI systems and secure access to advanced computing resources. Because opportunities to invest in leading private AI companies remained limited, demand consistently exceeded available ownership, pushing valuations even higher. Each new funding round increased the estimated value of employee equity, even before many shares became liquid. OpenAI's success became more than the story of one company. It marked the beginning of a global race to lead the future of artificial intelligence. The next chapter explores how that race reshaped the technology industry and why companies around the world accelerated their AI ambitions. OpenAI's rapid growth didn't happen in isolation. It accelerated a global race to build increasingly capable artificial intelligence systems. Technology companies dramatically increased AI investment, hiring, and product development to remain competitive in rapidly changing markets. Billions of dollars flowed into AI startups, research, infrastructure, and advanced computing, reshaping priorities across the technology industry. Entrepreneurs launched new AI companies to tackle challenges in healthcare, education, finance, manufacturing, and many other sectors. Demand for experienced AI researchers and engineers surged as organizations competed for top technical talent. Building advanced AI required enormous investments in computing infrastructure, specialized hardware, networking, and energy. Artificial intelligence quickly evolved from a research project into an everyday business tool used across countless industries. Companies integrated AI into customer service, software development, research, and operational workflows to improve productivity. Universities expanded AI programs, preparing students for careers in one of the world's fastest-growing technology fields. Every new application strengthened a growing ecosystem, attracting even more investment and accelerating innovation. Governments and businesses increasingly recognized AI as a strategic technology with long-term economic importance. Competition pushed companies to release increasingly powerful AI systems at an extraordinary pace. Confidence in artificial intelligence helped support higher valuations for companies leading this transformation. Yet the future remains uncertain. Success will depend on technological progress, commercial execution, regulation, and global competition. Next, we'll explore the opportunities and challenges that could shape OpenAI's future valuation in the years ahead. Reaching an extraordinary valuation is impressive. Maintaining it over many years is an even greater challenge. OpenAI must balance ambitious research, commercial growth, strategic partnerships, and responsible AI deployment as the company continues to evolve. Competition is intensifying as established technology giants and fast-growing startups race to develop increasingly capable artificial intelligence systems. Enterprise customers will ultimately judge AI providers by reliability, security, performance, cost, and measurable business value. Supporting advanced AI requires enormous ongoing investments in computing infrastructure, engineering talent, energy, and specialized hardware. As AI models become more powerful, the resources needed to train and operate them may continue increasing. Governments around the world are also developing new regulations that could influence how AI products are built, deployed, and commercialized. Different regulatory approaches may create both new opportunities and significant challenges for companies serving global markets. Continued scientific breakthroughs remain essential because long-term leadership depends on constant innovation rather than one-time achievements. Investors continue reassessing expectations as new technologies, competitors, and market conditions reshape the industry. Supporters believe artificial intelligence could unlock enormous productivity gains and create lasting economic value across countless industries. Skeptics argue those expectations must ultimately be supported by sustainable business performance and consistent financial results. One reality is clear. Predicting the future of rapidly evolving technology has never been easy. Regardless of what happens next, OpenAI has already transformed the global conversation about artificial intelligence. The final chapter isn't just about one company's valuation, it's about how AI could reshape society for decades to come. This story was never only about OpenAI. It reflects a much larger transformation reshaping technology, business, and the global economy. Behind every breakthrough stood thousands of researchers, engineers, designers, and partners working together over many years. As investor confidence grew, existing ownership became more valuable, creating substantial paper wealth for many people across the organization. But higher valuations don't automatically mean cash in the bank. Much of that wealth remained tied to ownership rather than immediate liquidity. Every remarkable valuation was built on years of research, experimentation, collaboration, and continuous improvement. Today, artificial intelligence is already transforming healthcare, education, engineering, finance, manufacturing, and countless other industries worldwide. The next generation of innovation will likely come from millions of people building new products, businesses, and scientific discoveries across the globe. History shows that revolutionary technologies often create entirely new industries and opportunities few people could predict. The next billion-dollar company may already exist inside a university laboratory, a startup, or an ambitious research team. Investors continue funding the future, knowing that success depends on innovation, execution, and long-term vision. Exactly how artificial intelligence evolves remains uncertain, but its influence on technology and business is already impossible to ignore. OpenAI's valuation became a symbol of something much larger: the world's growing belief in AI's transformative potential. Whether valuations rise or fall, the technologies being created today could shape how billions of people live and work tomorrow. The AI revolution is only beginning, and its greatest chapters may still lie ahead. Thanks for watching.